folks, and welcome back to another edition of Money in Motion on this fine Monday morning or afternoon, wherever you are in the world. But really excited to talk today about a lot of new data, also a lot of volatility in the futures markets in the overnight session, and excited to talk about how things kind of set up into the week. A lot of interesting metrics, so I'm very excited to start today's show. But Monte, how you doing? Anything you thinking about this morning, markets or otherwise?
Oh, yeah, I'm thinking about plenty of stuff. Not a whole lot to think about when it comes to Bitcoin. I mean, you mentioned that there's plenty of volatility, but not in Bitcoin. Elsewhere, you got to look elsewhere for that vol, and that's what we'll talk about today. And I think that it is a Monday, so I'm going to kind of do a little bit of pontification today. But I think that there's a good case to be made for continued growth in the stock market while Bitcoin continues to trade sideways. And I'm going to explain a little bit why I think that's the case. But CJ, I know you have some data that you want to dive into, share with the people. If you'd like to start off, the floor is all yours, my friend.
Yeah, sure. Okay, so let's just recap some COT data and some targets, notably things to be looking at. So NASDAQ, large speculators actually got more short in like the following week, which is interesting in the NASDAQ. But overall in equities, things are pretty much unchanged. A lot of large speculators, you're starting to see short covering and a little bit of capitulation from some of the bears, but a lot of the bears still have not capitulated. You see a lot of rhetoric on CNBC where people are saying like, oh, I'm the last bear standing. I would disagree. Not saying we can't have a pullback or anything. I just feel like that's a lot of the sentiment. I mean, even Tom Lee, for instance, was very hesitant last week when, the most perma bull is slightly hesitant. I mean, should you be more bullish there or should you be less bullish? It's an interesting, psychological thing when you think about it. But anyways, out of all of the U.S. indices, the one that's the most interesting to me right now is the Dow, because it actually has flashed kind of a short signal based on COT. There was a lot of speculators basically getting long this, and that's really a nice explanation for the outperformance throughout the Dow in the last week. But to be honest with you, I'd not get a short this one, even though it is providing kind of a sell signal. And the reason is because across the board, if you were to combine all the COT data across equity indices, Russell, NASDAQ, ES, Dow, retail's net long for 2 weeks in a row, but still the picture is generally pretty neutral. And like a thing you have to remember, I think, is that, Dow could end up looking not like Cocoa necessarily, but the COT data, things can trend very strongly. This is another example of, how we've been overextended for quite some time. So we'll see. But I did think that was somewhat interesting. As for U.S. indices, I think this is one that I've kind of been talking about for the past couple of weeks, and something that I've written about in the report that we released for the Trade the Chain community on Sundays. And that just has to do with if there's going to be an equity indice, which I'm long, I'm going to be focusing on the Russell 2000 because it has a COT value in the oscillator of about 70. Therefore, what that means is that out of all of the US indices, Russell still has the most large speculator shorts that presumably could be forced to cover and forces up here from a nice move from roughly 2,000 to 2,100. So that's one that I am long right now and trying to capture that potential breakout move, clear invalidation below 1965, roughly, the previous support level that we created. So I think that's a pretty interesting one in terms of US equities. I do want to go into commodities a little bit. I guess I'll wrap this up very, very quickly with just two more assets, then I'll pass it back to you, Monte. But, nothing much changing in oats. We talked about this a little bit last week in terms of getting short based on the COT data. That one's, I guess, working so far. Grains in general have gotten me pretty excited because as a asset category, when you look at the soybean family, you look at oats, wheat, A lot of this stuff has really started to sell off in the past couple weeks after being pretty ubiquitous, pretty like crowded long across the board. Soybeans is a good example, or specifically bean meal is a good example of this. And I really want to do some trend following in terms of like COT data and doing trend following in non-crowded markets. That's kind of the idea behind the Russell trade. But this one, for instance, we still are in a year-long downtrend in terms of soybean meal. So we'll see how this one ultimately ends up. But I'm really liking the breakdown that we're seeing and the weakness that could potentially continue in some of the grains. But if you look at this, this is a classic example of having retail longs continue to step in, large speculator longs, just trying to buy into the end of this. And it looks like the trend followers who are trying to ride the uptrend are starting to get a little bit squeezed out. At least that's like how it was in terms of the volatility last night. I just want to show this 15-minute chart because it was really just like down only.
Yeah.
So yeah, maybe we'll get a bounce here from this previous support level, and then I'll maybe look to short into maybe like another retest of 65. But yeah, like doing trend following in some of these commodities, I think is it's a pretty favorable strategy in many cases. I mean, you see how these things have really trended a lot. COT data, for whatever reason, has seemed to work well with like soybeans and the soybean family for whatever reason. Perhaps it's just more of a trending market. Anyways, a lot of information there, Monte. Anything in specific that you'd like to comment on, or anything you're looking at and want to bring to the table?
Yeah. I just want to. Well, first, I'm going to start with a little bit of an update about some things that we talked about last week, and I think that they'll play a significant factor in the price action that we see this week. So, I figure we may as well talk about these things, and one of them is the DXY. And last week I had mentioned that we were seeing resistance at this previous level of support for the DXY being exactly at the 102 level, and that level is proving its criticality here. We put in a doji after what had been a pretty anomalous week in which both the DXY and equities were going up, with the exception of this day here, right? And we were asking the question, is this the shift? Is this where we see the dollar start to rally and equities start to pull back, and those bears that CJ had mentioned finally be validated? Well, doesn't look like that's going to be the case, as we're going to get rejected at that level, seeing some bearish price action in the DXY, and that's translating into some positive price action in the equity markets. And I first want to say that I completely agree with CJ in the sense that I think that there are still a lot of people trying to short this market. If you look at the NASDAQ in particular, I think that last week's massive bearish candle and our subsequent inability to make a new high had a lot of people that were not even in the market yet. Like there's been bears, there's been perma bears since the start of the year that have just been capitulating and fueling this uptrend. But I think a lot of people last week got caught in the game of, wondering whether or not, is this the end of the uptrend? Is this the beginning of a secular trend change? I don't think it is. I think there's reason to believe that we can continue to trend higher. And, we don't we mostly stick to the charts. We don't do a whole lot of macro babble. But I think that, CJ, what you talked about and how there's still a lot of bears left to capitulate, that's something we've been talking about all year, right? When they capitulate or when they switch, like these fund managers, it's their job to earn money for their customers, right? And if they're not yielding return, then they're gonna lose their job. They're gonna need to put their customers' capital into the market at some point or another, or else they risk, like I said, losing their job. And I think we still haven't hit that point yet. One of our favorite analysts, he's got a great YouTube channel. I'll give him a quick shout out, Jason Shapiro, Crowd and Market Report, CMR. But he mentioned something that he calls the Goldilocks zone. And that's kind of a mix of where We have a lot of bears left in the market that haven't capitulated, and also we have favorable macro conditions. If you think back to what kind of kicked off this whole like inflation fear and everything that was happening around inflation, yes, of course, the Fed and interest rates, are playing a slight role in that. But think back to the time when like people were talking about boats at the ports of LA and they're like backed up.
Remember that little like mini crane they brought to dig out the massive cruise ships? Like, oh,
Yeah, right.
this is 2% increase in inflation right here. This little crane. Go on.
Exactly. It's like that was what was also causing inflation. It's not just the Fed, right? We had those logistical issues occurring uh post COVID that were causing inflation. In retrospect, there's no doubt about it. Those issues have since subsided, and I think, you know, like Jason Shapiro said, that kind of lays way for the Goldilocks zone. We have bears potentially set to capitulate, hedge fund managers that need to, invest money into the market lest they risk losing their job. And then also, macro conditions are not that bad, despite the fact that people make them out to be like, we're in an economic or we're headed towards a big economic recession. There's no evidence to support that claim. I think there's more evidence to indicate that we continue grinding higher and that these markets continue to grow. And I'm going to stay with that stance until I see otherwise. So that's just kind of what I'm seeing. But CJ, would love to get your thoughts on that as well.
I've been seeing this common tweets go around on Twitter or X, whatever.
That's gonna take.
Anyways, about like Zillow home prices and how Zillow's back into a kind of a bull market.
As well.
My rents keep going up, so evidently somebody's doing well.
Yeah, no,
but yeah,
no, that's a fair point. Fair point. How about we talk about some crypto real quick? I mean, there's not a whole lot to say. Like I said at the top of the show, right? Like, look at this Bitcoin chart.
I think one thing I would like to say about Bitcoin,
sure,
and just the fact that we've had such low volatility, I don't think it's particularly wise, at least in my experience, to be shorting kind of a boring market, especially Bitcoin in these particular levels. Even if we do, I'll say this and we'll break lower and go to 25K or whatever. That's not the point. The point is that the risk reward and the setup doesn't seem worth it. And I still see, people who have master trader in their Twitter bio calling for, 25K. Anyone who has master trader in their Twitter bio is probably with high degree of certainty not a master trader. But to the point, I wouldn't be shorting a boring market here. I think one thing you have to realize that's been pretty bullish is that you still have all of these on-chain degens who are going to they're bridging to Coinbase's new L2 on an Optimism stack. It's and they're bridging, and the bridge doesn't even have a front end. I mean, this is how desperate people are to get to the new thing and to be early. And I think the fact that you still have that real excitement and desire to speculate and to almost gamble when really there's no new market entrance, it's pretty bullish for the speculative use case of crypto. It doesn't seem to be going anywhere. Whether you think that's a legitimate use case or not, it's existing and still thriving in the most low vol of market environments.
Right. And one thing we talked about last week is how, although the price action has been lackluster, like there is still on-chain activity, like you had just mentioned, and like there is still participation going on, and there's assets that are moving, but it seems like it's just the same group of participants competing against each other. There's no new money coming in yet, but those people that are moving their money, into Coinbase's layer 2, right? They're anticipating a wave of new money coming in, and they want to be ahead of that wave. And I think that's a very valid approach and has been proven valid in previous market cycles as well. If you can, be early to what is the next big thing, you stand to make a lot of money. And ultimately in crypto, if you're like early to a wave like that, like people that caught the L1 wave early, or people that caught even like the NFT wave early, or caught part of the metaverse play. Like those are life changing gains and can like be enough to make you like enough money for a year, and you can just go on vacation, forget about trading. Um, but to CJ's point
How
about
many
Bitcoin,
people actually do that though when they make a ton of money?
oh
Just
no,
go on
no, it's called
vacation.
ergodicity. You got
We
to
all
keep,
keep trading. We all
yeah,
keep think we can win forever.
yep.
It's a constant psychological trap.
We evolved from apes, CJ. You can't expect that much from us. We're, that wasn't that long ago in the grand scheme of things. But anyways, looking at the Bitcoin chart in particular, incredible lack of vol. And I've seen one or many tweets on Twitter talking about how this lack of volatility is, um, and also lack of volume, is indicative of a great time to short this market. And I want to make the case that I think this can continue to trade sideways for at least another week to 2 weeks, even if equity markets, trend positively or turn down. I think Bitcoin could plausibly still grind sideways right where we're at right now. And one reason why is because of what I just stated, the fact that there's no new market participants coming in right now. There's no new money flowing into the space. Without that, it's really hard to drive money up. But one thing that could be a positive catalyst, and I think will be a positive catalyst, is a potential short squeeze. Because there is such negative sentiment and people are expecting price to go down, I think we could plausibly see uh, a much longer period of sideways price action below 30K than people are expecting. And like CJ said, even if it goes down 25K, that's not the point. The risk and reward right now, I just don't think is there. And one thing I want to just bring to your attention is the Bollinger Bands, and how, people have been saying that, we're due for a big move. We're due for a big move. Well, not necessarily, right? What did I call it, CJ? The pincer movement? Like, we're not seeing that compression of the Bollinger Bands even yet with this lack of volatility because of the sell-off we saw back here on the 24th on Monday. But nonetheless, I mean, this lack of volatility looks like it could plausibly continue for another week, before we start to see the Bollinger Bands contract to a degree at which marks a big move. And, we are below this moving average here in the middle, the midpoint of Bollinger Bands here. Um, but however, you can see that even in instances where we were below that level and we were going lower, people tried to short the market. We saw this persistent lack of volatility. Then you see the Bollinger Bands compress. Then you get a positive move to the upside. I think that is actually a very plausible scenario in the coming weeks here. Because of the negative rhetoric I've been seeing on Twitter, people are going to try and short this. They're going to be forced to capitulate and get squeezed out. And we could see a move back up to the top of this range here at 32K. But what I want to see first is the pincer movement, and we haven't gotten it yet, right? The Bollinger Bands are still technically diverging. So that, for me, leads me to believe that we could plausibly see another week of uh, paint drying, grass growing, or Bitcoin price action. Pick your poison. They're about as equally interesting at these current levels, but nonetheless, I wouldn't get caught up in the game of trying to short it right now, because I think that, like you mentioned, CJ, the risk and reward just is not there. I think your money is better spent um, elsewhere. I think there are better opportunities elsewhere. Um, and we can talk about some of those, but I've been going on for a while, so I'll pass it back to you.
Yeah, just looking at my watch list here. Um, yeah, feeling a little bit underexposed to some of the crypto equities, honestly. Maybe we'll get another shot, but we'll see. Um, but yeah, I mean, if you just look at the Bitcoin like 4-year cycle and where we're kind of at, I just really the only thing I think that I'm planning to do is just try not to get liquidated over the next 18 months and hold a large portion of spot and ride that wave up. And shorting it here, just doesn't really historic. If you were to provide historic context to what the period of time we're in, it just doesn't make sense to short it, in my opinion. But I do want to go to some other markets. China is starting to have a bit of a comeback. So let's talk about some of those stocks. First, though, I just want to show this one.
What have you got for us?
I just want to look at Snap because it's actually moving today. I guess
I
Warren
did.
Buffett was right. All you had to do was buy it after earnings.
Is he ever wrong? No, but that was actually a very good call by you. You actually mentioned that last week as a good spot buy.
I didn't buy it or trade it, but I mean it happened to rebound. So
yeah, nonetheless, I mean, recognizing that opportunity as like I think, sorry for interrupting, but I think like, what's going on with Snap is very similar with what happened to like Meta, where you saw like people thinking it like a massive overreaction to earnings, and then they're like, oh, it's definitely going to retrace after that overreaction to earnings, and then it doesn't happen. But with Snap, it happened in the opposite direction. I think that was a genuine overreaction to earnings. They beat on the top and bottom line, and price still fell that much. It just was counterintuitive to what you'd expect to see following that sort of earnings report, especially when you consider what we saw with the rest of some of the other tech names, and their price post earnings. But today, Snap looking very strong, and even if you didn't take that trade, CJ, nice call, identifying it as a good spot buying opportunity last week.
yeah, it might not be too late either.
No, definitely not.
If we are going to trend higher this week, Snap could probably reclaim its previous highs. We've seen this before in stuff like AMD. So
Sure.
Yeah, Snap's an interesting one. Let's check out the Hang Seng Index. It's been going up only throughout the previous week. See if this translates to Bitcoin price action Hang Seng Index will probably have to get going a little bit more to see some true, risk on capital from the East flow back into like crypto assets. That played a huge role, obviously, in the initial phase of the echo bubble. There's a lot of Chinese assets in crypto that were really playing an important factor. Things like CFX kind of come back to mind, and some others. But if we're looking at the 3x bull shares ETF yin, this is an interesting one, beginning to trend with a little bit of an inverse head and shoulders pattern. Nothing that I've traded around particularly, but something that does look very bullish and an interesting 3x levered ETF. If you're looking for short-term volatility, that's kind of been the major play. I guess if you're looking at individual names, things like KWeb have done pretty decently. Haven't really been trading around them, but still looks like it could potentially run up to like 36 here. And then also Baba had been doing well. Yeah, all these look pretty good. So this might be the meta right now. It's China.
Yeah, I think, CJ, like one thing all those charts have is a nice technical formation in the sense that they're kind of like after a series of lower highs, lower highs, lower highs. Now they're finally putting in higher lows and higher highs. So I think like even just the general Hang Seng Index.
You're gonna make me do it here.
Oh boy, there's the parabolic price action. At the very least, I was looking at Alibaba this morning as well because, of course, like you said, this could be the new meta, trading China. But I think at the very least, like I like this setup because you have a breakout level, which would be above that previous swing high that we had in April, right? And if we break out above that level, I love it up to that 120 level. I think we see straight continuation and strength from Baba. and we see it go up to that 120 target. And that's a significant move and would be a great move to capture. I think from a technical perspective, this is one of the better looking charts in all of markets right now. So I'm glad that you brought this up because I would have forgot to mention it otherwise. But that is what I'm looking at, and that's kind of my setup for this. If we do break above that 101.5 level, I will be I'm just going to be buying some spot on this one and exiting at 120 with discipline. Not going to get caught up in any euphoria or any like hopes that this thing makes new highs. I'm more than content with a $20 move, 20% move in a stock. I am more than happy to get in and get out. And I think that Baba could make that move.
Yeah, it definitely seems that way. The other one that's been interesting that some fades have been talking about is semiconductors.
Yeah.
So yeah, SOXL or SOXL. Interesting 3x way to play it. Yeah, that one's kind of breaking out into new highs as well. So I think there's a lot of interesting like tech plays as well as Chinese equities, as well as honestly commodities. I mean, there's a lot. That's why I was excited at the start of the show. Like, there's a lot of volatility, a lot of interesting opportunities, and a lot of strong trends continuing. So excited to. All right, nice. We actually did have somebody buy some Snap. All right, Ryan. How about
Yeah,
that?
there you go. See, CJ, it wasn't all in vain. You got
We
some.
just won't talk about the times where it would have went down and destroyed you. We won't talk about that.
I'm sure he will. I'm sure Ryan will make you aware of any losses that he accrues because of you. But anyways, yeah, I think that one thing that we've also talked about in the past, CJ, is the fact that like people are going to be like, oh man, Bitcoin is so boring right now. Like, the price action, like, why is it so lackluster despite the moves in other markets? And like you pointed out, semiconductors, making new highs. Like, why isn't Bitcoin moving? I think the answer lies in the question, right? Other assets are moving, other asset classes are moving. And if Bitcoin's not moving, you're not well served to be keeping your money there. Obviously, you can't catch every uptrend and every move in every market, but if you see signs of assets showing strength, like things like Apple that are making 52-week highs last week, like why would you be buying Bitcoin here when it's has shown no relative strength, despite the fact that last week the equity markets looked, very bullish. The only thing I'd say is if you had a longer term time preference and you're willing to hold for more than 1 year, then yeah, I think this is actually a decent buying opportunity. But the short term speculators, they're not trading Bitcoin right now. They're trading elsewhere.
Man, ladies and gentlemen, I remember Monte giving me this exact same rant in the Market Rebellion office in like 2019, 2020. It is such a similar period of time. I mean, it's like time is literally a flat circle. We had, folks back and then the bubble today is obviously Nvidia and other AI stuff.
AI, yeah.
The bubble back in those days was Tesla because everybody's like, it's a fraud. They're never going to make any money. They're manufacturing, can't make the cars. And the stock just never went down. It just kept going up for the next like 2.5 years while everybody else was calling it a bubble. So it doesn't necessarily mean like contrarian trading. It's not about price action necessarily. It's about positioning of the market participants. If people are calling something a bubble, anyways, my point is that very similar period of time to 2018 and 2019 because Bitcoin wasn't doing anything there either. And Tesla and other tech stocks were making new highs and doing really exciting things. But Bitcoin, eventually it caught up with the halving narrative and had its time. Every dog has its day, as they say. And Bitcoin probably will have its day again. But for the foreseeable future, it's just been kind of boring. I mean, the 2019, 2020 playbook, especially with like DeFi starting to break out, it's kind of interesting. But like so much of like what happened 3 years ago is starting to repeat in like very slightly different but very similar forms. Anyways, that's all I got for today. I'll let you wrap it up.
Did you say time is a flat circle? Did you just quote Matthew McConaughey from True Detective? I think you did, but I liked it.
Markets are obviously certain things change, but
Yeah,
the
no,
psychology of humans. What'd you say at the beginning? We evolved from apes, and that wasn't that
yeah,
long ago.
in the grand scheme of things, it wasn't that long ago. I mean, in the grand scheme of things, we're not that much different than apes at the end of the day, and I think we might start to see some of that ape nature play out in the markets here, hopefully. So we shall see. But that's all I got for today. As always, please like and subscribe. It helps out the channel a lot. Appreciate all the comments today. Um, love to hear what you guys are trading. Love to hear when you guys get in on a trade. Always feel free to drop that in on the chat because we're more than happy to do some analysis for you. But what else do we got? Don't forget to check out tradethechain.com. You can get a 14-day free trial. Very important right now to keep an eye on the sentiment and the trading volume. Lots of people watching that. So check it out. You can try it 14 days free. And during those 14 days, you can hop in the Discord where CJ, myself, Nick, Alex, um, we're always in there talking with the community, sharing trade insights, publishing actionable insights with entries, exits, and stop losses. So definitely you're going to want to head over there and check that out. We have a community of traders from all around the world that share some really bright insights. It's not just us. So definitely head over there and check that out. Like I said, you can try for 14 days free at the link right below me over here. And yeah, CJ, I'll leave you with the final word, my friend.
Thanks, guys, for tuning in. We'll see you back here same time tomorrow. Till next time.